Welcome,
All
welcome.
right. Woo! Welcome back to Orbiton Weekly.
Yeah, I'm excited about this week's topic. It's something that's been on my mind for a little bit, actually. I really wanted to
hmm
talk about this because it's been a hot topic with both clients and then some investors we talked to too.
This week we've got kind of a general topic, but some specific points that we wanted to hit.
hmm
We are talking about how businesses grow, why others grow faster.
hmm
How do you find that torque in your industry?
hmm
And the interview with Mark Zuckerberg and Sam Altman kind of inspired a lot of our points here because it is how we feel about Orbiton.
Yeah, it's really cool because that interview went back to when Sam Altman was running Y Combinator before he stepped over to be the CEO of OpenAI. And now Sam and Zuck are kind of battling in the AI landscape. And
hmm
Facebook or Meta, they just bought Manus, which is an AI startup out of China, and they bought them for $2 billion, which is really interesting. But really, the topic of today, the reason that we were wanted to talk about this, and I really was excited about this, is we sit in two very different industries. So a lot of our clients are in the mining sector, and then we
hmm
also have we're a software AI focused startup, and so we often look at our peers or companies that are in the AI space and see their massive growth rates, and then we look at our own growth rate, which has been, we went from two companies to 22 now in the past 6 months, which is
hmm
still good, but it's slower than like 0 to 100 million in 8 months, which is what Manus did. But then you look at other companies like in the mining sector and it's like two, three,
hmm
4 years and maybe they hit like 10, 20, 30, $40 million in revenue. And then that really is what sparked my desire for this conversation around torque.
hmm
And the other thing too is now with gold prices going up, suddenly those mines that were doing, two, three, $4 million a year are doing 40, 50 million, or, maybe doing 10, $20 million a year
hmm
because gold went from whatever it was at before, like 1400 an ounce to now over 4300, 4400, 4500 an ounce, 4600 an ounce. And so that is something that's been like a growth lever or a source of torque for the
hmm
company.
Yeah, mining has scale, but no flywheel, no random, not random, but no like torque explosion like a tech company could have.
No, because
Um,
it's not in their control.
yeah, no, it is.
That's the thing. So it's like, what are the levers that you can grow your revenue? In
hmm
in software, in tech, you can iterate because you're selling to people. So
Yes.
number one, who are you selling to? Can they make the decision by themselves? If it needs more approval, like we go through a whole series of approvals before we sign a client. But
hmm
somebody who signs up for ChatGPT, it has on their own initiative their ability to put down their credit card. So by nature, consumer grows faster. Second,
hmm
how predominant is the pain? And, the problem that you have, how predominant is it? How frequent is it? And then the third one is your price point. How affordable is it? Like, where someone can just pull out their credit card buy,
Yeah.
or are you charging like $10,000 to $20,000 a month where you need more capital so you have a less smaller pool of people and a higher touch point sales process. So these are like the things that when I think of like torque for a software company,
hmm
these are the three. Like ChatGPT, for example, people can buy on their own initiative. The
hmm
problems, every time they're stuck or have a question, they go to
Yeah.
ChatGPT. And then in terms of like approval processes or loops they need to jump through, nothing. They just
Yeah.
Whereas Orbiton, we have our chatbot system that we sell to public companies. And so when we sell to investor relations or a VPIR, they need approval from CFO or board management or CEO in a lot of
hmm
cases. The problem that they experience is typically they experience it every quarter when they look back and realize they haven't had enough touch points with investors or they don't have enough data about the
hmm
investors they've interacted with, or they experience it if an investor ever complains. Lower frequency, right? But still
Yeah.
painful, but lower frequency. And then the third is that our ticket price is higher. It's not something an individual pays for. And so the growth is
hmm
slower, but then we're trading it with more stability because once we lock in a client, they can't leave next month like you can with ChatGPT.
Yeah. Yeah. The building is more compounding and
Yeah.
it can explode. but like the torque will be built on the compounding and like the constant learning
Yeah.
machine of Orbiton, of like expanding the products and expanding like
The
just evolving
relationships
with
and the
what
brands.
people, yeah.
Yeah.
Whereas something that is like individual use case, like it can just go, like it can just explode one day with like just awareness of it.
Yeah. Yeah.
um
And so that's why, like, as a B2B company, we can't compare ourselves to B2C growth
yes.
rates.
Hmm.
You know, you have to keep in mind, you're selling to businesses.
Yes.
It's different,
Yes.
right?
Yes.
And then also, like, you know, Zuck talked a lot about in that conversation with Sam Altman and how he has product focused growth,
Hmm.
which, you know, it makes sense because he's trying to get his user to invite two, three, or four other users on their own agency so he can get millions of people. We have a
Hmm.
product that we are selling to individual companies. So I agree that we have to do more work on actual product led growth. But one
Hmm.
of the fundamental keys to our success is a very strong sales and outreach system
Hmm.
because this is a high touch point business,
Yeah. Yeah.
you know.
They talked a lot about like the start of Facebook in the interview that we're
Hmm.
referencing, and the like the why they succeed, why they think that they succeeded and why others didn't.
Hmm.
And the first thing that he said was just, first of all, we just kept going and other people stopped. Like
Yeah,
they served one purpose and then that was it.
MySpace was a great example. Like they just
Yeah.
kind of like stopped. Yeah,
Yeah.
stopped innovating. They didn't stop their product. They stopped
Yeah, yeah,
innovating. Yeah.
it still exists, or it still existed, and but they stopped learning. And if your environment is moving faster than you are learning, then you're not innovating with what people need, and you're no longer actually fixing any problem. You might still be a service, but you're not going to carry on and explode with the times.
Yeah, yeah, and it's like, you know, you got to keep innovating, you got to keep thinking about what the next thing is. And
Hmm.
something that was really really interesting is that you know, Facebook also introduced a growth team, right?
Hmm.
But they only did that once they like after he talked about their low point, well, or one of the low points in their or one of the hard times, I guess, not really low points, but hard times in their business, which was when they got the $1 billion buyout offer. And I love how Zuck
Hmm.
says we got an offer to be bought, and it was a lot of money. It was $1 billion. Like the Yahoo
Yeah.
offered them $1 billion to buy Facebook, and Facebook at the time was still just going university to university. And he was
Hmm.
like, at that point, it was when we actually started to think about we need a real business, or
Yeah.
is this a real business?
Yeah. And it's interesting that he references that as a low point, whereas so many people would take that as absolutely take that and go.
Yeah,
I'm gonna go live a very comfy life now. But they had to think about if it was a company or not because they didn't start off making it a company.
no,
Something that he said was, we weren't focused on building a company. We were just focused on building something that we thought would be useful, which was just their personal experiences of being in university and thinking that this would be something really needed or really
yeah,
helpful to like literally him and his friends. Um, and that's what makes businesses, products, software companies very useful, is when it's coming from a personal pain point. And for us, I think it's just so relevant to Orbiton because our whole thing is that we've been in IR and we see all of the needs that aren't being met. We have the knowledge and the technology to meet those needs, and that's our whole focus. Our like offerings and services may change and shift and
yeah.
grow and evolve, but yeah, we're not basing Orbiton off of a piece of technology.
No,
It's
no.
just to solve a problem that we thought
We
would be
experience.
helpful.
Yeah,
Yeah.
like it's so like when I look back to like how we started is like, you know, the how specifically our AI IR agent started was just a personal problem that
Hmm.
I was trying to solve. And it's not like I thought that this would be a product that people would want to pay for and use.
Hmm.
It just kind of turned out to be. Do I know if this is going to be a big business? I don't really
Hmm.
care. Right
Yeah.
now, I don't really care. Right now, I just want to be of value to our clients. then we'll see, once you hit like a
Yeah.
critical mass, then you're like, okay, now I have my market, now I have my strategy. But I feel like in the beginning, you just got to build stuff that people like find useful. And
Yeah.
Zuck talks about that being the contradiction of San Francisco is like he believes you shouldn't
Yeah.
go out to start a company.
Yeah. He called it the perverse part of Silicon Valley or whatever.
Yeah,
Um, but he said that it's strange when you go out just with the purpose to make money, whereas the successful and strongest companies and the ones with the most like brand power, people
yeah.
backing it that really love it, you're just following usage, you're just following what people need or want. And for Facebook, it was friends and other people from different schools being like, oh, could we have that?
But that's another thing that now I do look at when we look at new
Hmm.
products. I'm like, what is the growth torque? Like,
Hmm.
so for example, the chatbot, the advantage is that it's publicly on the company's website, and so other people see
Hmm.
it. So that's
Yeah.
like a growth lever for us, right?
Yeah.
Also, easy to implement for the company. It's just one line of code. If we had made it more complicated, like 16 lines of code, specific embed you
Yeah.
need to make on your website, people would be gone. So
Yeah.
these are all growth levers that increase your torque the easier it is to roll out. Another
Hmm.
thing that we did is we added like a 1 month free trial. So reduce friction to test it out and prove the value, increase
Hmm.
torque. So these are all like levers that we're pulling. And I think it's
Yeah.
fascinating because, we can adjust these things and it's like mining, they don't have control of their product. And so they
No.
can't really adjust the torque for their growth. Like there's only so
Yeah.
much gold in this rock.
Yeah.
It's like hard to, it's a different mindset. And I have a
Yeah.
lot of respect for what they do because it's really hard, but it's just like, that's why you can't really compare a mining company and their valuation
Yeah.
structure and their growth rate to like software.
Yeah, totally. They don't mining doesn't have a product pull. They only have financing pushes or
Yeah.
or breakthroughs with the actual ground.
Yeah, with like engineering or geology
Yeah, yeah.
but the advantage is, there's way more certainty involved with mining.
Yes.
Because once you hit gold, nobody's going to come steal your gold. Like that's
Yeah.
your gold. You have a certain mine life. You know how long it'll
Yeah.
last. The price is determined. The part that's not uncertain, that is uncertain, is the price of your product, which is a big problem.
Yes. Yeah.
But you know that when you build a mine at a certain cost per ton of ore that you mine, you know that up
Hmm.
until a certain price point, it will be profitable. You will be cash flowing. And if the price
Yeah.
of the commodity goes up, your costs stay the same, your margins go up, your profit goes up, and you start doing other stuff. But
Yeah.
that's why right now though the mining industry has an insane amount of torque in its growth, and you look at their stocks
Yes.
and they've all gone up because the easiest lever to change price of your product has exploded.
Yeah,
So
totally.
yeah,
Yeah. It is very important when with any industry to not be comparing yourself to non-relevant other businesses.
hmm
You like a mining company should not be comparing themselves to a tech company,
or
a
oil and
B2B.
gas, or
Yeah,
yeah,
yeah, yeah. Like we shouldn't be comparing ourselves to something that is just for the general public,
hmm
or you'll get too caught up and discouraged.
and you won't build stuff that people just want like to use.
Yeah,
Like
yeah,
think if Facebook started comparing itself with like Coca-Cola, and it was like, oh,
yeah,
we should start like selling some products on Facebook in the beginning.
yeah,
Would have killed the
yeah,
company.
yeah, totally.
Let's add a
Yeah,
paywall, like to see
yeah,
five friends. Like let's make it like a dating app. Killed the company, right? So it's like
yeah,
you got to remember that you're different, and you should lean into what makes you different.
yeah, totally.
Awesome. That was fun. I was really, really wanted to get that out, and that was a good conversation.
Yeah.
Thanks, Brian. Until next week.
All right, see you guys.
See you guys.